Cool,
All
cool.
right.
Looking forward to helping you guys.
And if you guys can just monitor the chat for me
Yep, I got
while
it
I
pulled
go
up.
through this. Cool,
I
cool.
got you.
All right. So first and foremost, market structure is, in my opinion, the most important thing when it comes to trading. Because if you don't understand the structure of the market, then it's kind of hard to tell what way the market's going to go. That's how you make money. So when you're doing a breakdown, you're always going to start from the highest time frame, work your way down. But the key things that you're looking for in the market to determine whether, it's in an uptrend or a downtrend would be lower lows. And if you guys don't have a pen and paper out, please do take out a pen and paper.
You're definitely going to want to take notes on this, guys.
Yeah,
especially everybody that throw one in there.
take notes. And try to refrain from drawing on the screen.
You can disable that also.
Let me
If
see.
you go into your settings, you can disable whiteboard or whatever it's called, or annotation. I don't remember what it's called.
Let me see.
But yeah, while he's doing that, guys. So yeah, market structure, it's basically all of these candlesticks that you see on the chart here. This is price action. And each one of these little candles represents a period of time, depending on the time frame that you have selected. So right now he's got, well, you just hit it from me on the settings, but what are you on, monthly?
He's got the monthly.
So he's on the monthly currently. So each one of these candlesticks that's on this chart here represents 1 month of price action. And the pattern that this chart creates is what we consider market structure. So he's going to be breaking down what that means, how you can trade it. But I just want to give you a little bit of background for those of you guys that are brand new to this. Each one of those candlesticks represents a period of time as specified by the time frame that you're on.
Yeah, whatever. I'm not even going to worry about that right now. Just try to refrain from drawing.
All good.
But it's all good. So yeah, to pick up where he left off, market structure is going to vary from time frame to time frame. But what I always do when going through the time frames is kind of like I was just saying, is trying to identify whether the market is making higher highs and higher lows. And when I say a higher high, let's just go back in time really quick. And actually, for the new people, let me put some colors on the chart for you. Okay, so you can see here the market was downtrending. When you say downtrend, you mean bearish market going down, obviously. So it was making lows, lower highs, lower lows, lower highs. Now, when you say a lower high, you're referring to the pullback. So you can see that this was initially an uptrend. So the market had created a high here, a lower high here, a lower low, but then it broke above those highs, or those previous lower highs, I should say, at this point here. So now when it broke above that point, came back down, and it retested that level. Now, when you say a retest, that's something that you learn a little further into market structure, but just giving you the basics right now, came back, retested, and created a new high, right? So now after a new high is created, the market has to pull back, or should pull back, to create a higher low. So in this case, you can see, let me actually pull out some arrows here. So you can see you had the high created here, the higher low here, and the higher low is where the market finds support. Just to clarify that, the market has to find support in order for it to be considered a higher low, or it has to find resistance in order for it to be considered a lower high. So after a higher low is created, you have a new high that's created. So that identifies to you that the market is in an uptrend. Now, in order for this uptrend, you actually had a higher low right here too that I missed. But so you had higher high, higher low, and then a new high created. So in order for the uptrend to be invalid, you need to see a break of structure. Now, a break of structure means that the most recent, if we just take this line here and drag it up, the most recent higher low needs to be broken in order for it to be a break of structure. Okay, and you can see that once that happens, typically the market changes trends and continues downward. So when it comes to anything in the market, you need to, well, any time frame, any pair, anything that you're trading, you need to understand the structure. Okay, so now I'm gonna go down into a lower time frame just to show you how structure matters. So we can see here on the monthly time frame that a lower high was created here. Why is it a lower high? Because it's lower than this previous high here. Is this making sense to everyone? Type a 1 in the chat if this is making sense so far. I just want to make sure you guys are following. Okay, cool. So lower high here, lower high here. Now we're on the monthly time frame, so every candle is 1 month. So you have to keep in mind what time frame you're on. So we can't say that because, you know, we're bearish here, that price is just going to run away, and we expect that to happen immediately. This is the monthly time frame. So now we have an idea in looking at the monthly. Let me actually delete this alert because it's in the way. That the pound is pretty bearish against the yen. So what I would do at that point, I mean, you could draw, let me see.
And just keep in mind that in Forex trading, guys, you're not usually going to be looking to hold a trade for a month. So really on a monthly time frame, you're really just trying to get a confluence. Okay. So like if Orion says, hey, I expect over the monthly big long-term time frame, I'm bearish on this pair, then you can keep that in the back of your mind when you're doing lower time frame analysis so that it works as a form of confluence for you. And so you're, you know, realistically speaking, are you going to take a trade based on the monthly time frame? Probably not. It's not very applicable to most Forex traders. Most of us do, even if you're a swing trader and you're taking it for, you know, those higher targets on higher time frames. Swing traders maybe trade weekly. Sometimes it's usually daily. You know, 3 to 5 days is usually a good swing trade. So with that said, you know, to say we're bearish on the monthly time frame, it's not really a reason to take the trade because a lot can happen within that month, right, for that candle to close.
Correct. So that's another thing to keep in mind. This candle is still currently open. So even though it looks like, you know, okay, for the month, we're going to close bearish and, you know, price is going to continue downward, price could just pull back. You know what I mean? So, but yeah, like Josh was saying, this is just giving you an idea. Okay, so right now we look bearish. So if we drop down to the weekly time frame, we want to analyze what is the structure on the weekly. So if we look left a little bit, we can see, okay, we had a lower high here. It was lower than these previous highs. We didn't create a lower low, but we did form another lower high. So this is where you could pull out a trend line. You can say, okay, let me see. All right, you know, we have an upward trend line there. We have higher lows forming. Why is this a higher low? Because it's higher than this previous low here. So if you look back in structure, you had lower low, lower low, lower high, lower high, lower low, price pulled back, created a lower high, but wasn't able to break past this previous lower low. So in the back of your head, you can say, okay, price is moving up, but overall it's still in bearish structure. It's still in bearish structure because this lower high has not been broken yet. That was the most recent lower high on the weekly time frame. But keep that in the back of your head, write it down in your journal. Weekly's looking bearish. Overall structure's bearish. Dropping down to the daily time frame now. All this was that weekly structure that we were seeing. Daily structure looks a little bit different. We broke past, let me zoom in more for you.
And for those of you guys that don't have a strong understanding of how, multiple time frame analysis works, you might notice that a lot of these moves look pretty similar, but there's moves within lower time frame or higher time frames, right? So this general direction where he is showing the daily right here, there's still that same trend line from the weekly, but you can see a lot more noise in between because each one of these candles now represents a day. So
Think about it as zooming in.
Actually,
yeah, there's smaller moves that happen within the larger moves.
Yep.
Let me make this visible on the daily so that you can see it.
Yep. That might just give them a good idea of why multi-time frame analysis matters.
Actually, Orion, when you're done with that, do you mind giving me a screen I'd like to show kind of
Yeah.
I do it with lines when I'm teaching market structure.
Okay.
Good idea.
Do you want me to drop down to a lower time frame, or do you want to take it over from the daily?
I'll take it over for a sec.
Okay, so let me.
Because you're breaking down the chart, I want to make sure that they're understanding like the what a higher high is, what a higher low is, like all that stuff. From my understanding, they're and pretty new.
You should be able to share. If not, let me know.
All right, give me a sec. All right, you guys should be able to see. Are you guys see my chart?
Yep.
Perfect. So what Orion is essentially talking about is when he says higher highs, higher lows, it's the structure of the market. So the market's going to do pretty much the same things over and over again. There's only so much that the market can do, and basically what it breaks down to is, for example, an uptrend is going to look something like this, where price action is obviously, like he said, moving up, but the way that we label it, the way that we know that we're in an uptrend, is we see price doing this. So we've got, this would be considered a higher high. So let me get this right here. And then this one would be considered a higher low. As price continues to do the same pattern, because that's essentially what it is, it's a pattern. As price continues doing the same pattern, we can continue labeling it as so. So an uptrend is going to be composed of higher highs followed by higher lows. And how you know that it's a higher high is you basically simply look at this one relative to the previous one. Is it higher or is it lower or is it the same? In this case right here, it's higher than this one, so we're going to label it as higher high. What about this low? Is this low higher than this one? Yes, it is. So it's going to be a higher low. So we label
Brian,
it
can you
as,
zoom in a little bit, just in case people are on small screens?
Yeah, forget that I'm on a 2K resolution, so it looks smaller for everybody else. Is that okay for everybody?
Yeah, that's good. Just get a little bit closer in.
There we go. Okay. So essentially that's what we're doing is we're looking at the previous structure, and this personally how I do it. You're looking at the previous structure and then determining it if it's going to be higher than the previous one or lower. So in this case, let's throw a curveball. This one right here, let's say price only reaches this right here. Now, would this be considered higher or lower than the previous one? In this case, it's actually just the same. For me, the way that I see structure is this would just be considered a high. And as long as this previous low doesn't break, so this doesn't break, you're going to continue being in an uptrend. Those are at least my rules. As long as this low doesn't break, you're still continuously on an uptrend. So what happens if, for example, this low, okay, come on now. What happens if this one crosses here? Then we've got a break of structure. So if it breaks the previous low on an uptrend, if the previous low is broken, then it is considered a break of structure. So a break of structure is when we transition, for example, from uptrend to downtrend or downtrend to uptrend. So we'll go ahead and label that. Break of structure right there. And now we know we've got a lower low because it's lower than the previous one, right? Ideally, to know that you've got a true transition between uptrend to downtrend, you'd like to see a lower high being formed. It's not always going to look this pretty, but ideally, you would want to see the next high being formed be lower than this one to know that you are now transitioned into that downtrend. If it doesn't, let's say it just goes right back in here, I consider this just a test. Unless I have that confirmation, I consider it a test. So let's say, just for example wise, let's say it does form a lower high. And we know it's a lower high because it's lower than that one. So let's say lower high. Now we're in a downtrend. A downtrend is made up of lower highs and lower lows. So as long as price continues to make these lower lows, actually copy. As long as price continues making these lower lows, as well as these lower highs. Oh, didn't mean to that one. Then we are continuously in a bearish downtrend, whatever you want to call it. And how we know we're transitioning back the other way is if the high is broken. So again, just to kind of repeat that, if you're transitioning from an uptrend to a downtrend, you're waiting for that low to break. The last low has to break. If you're transitioning from a downtrend to an uptrend, then you're expecting the high to break. So let's do an example of that. Let's say right here, we have something like this where we have like a higher low. It's higher than this one. Higher low. So we've got the lower high, lower low, lower high. Then we've got a higher low. That's your first indication of price potentially reversing, of price transitioning into an uptrend. So what we're looking for is a break. And this right here, if it breaks this, then it is considered a break of structure. That right there would be considered a break of structure. And our confirmation is going to be a higher low. Now, the reason all this is important is because when you're in the market, you want to take the guessing out of everything. Otherwise, you're gambling. If you're guessing,
wait. Say that again. Say that again. I need to put that on a T-shirt.
When you're in the market, you want to take the guessing out of trading. Otherwise, you're gambling. Like, quite literally, that's what it comes down to. So you have to understand whether you're in an uptrend, a downtrend, or a ranging market. Now, I just threw a whole new word at you guys, ranging market. What that basically means is that price is just going sideways. Price is going sideways. It's not really doing much of anything. That happens, and that's okay. But we're going to focus on uptrend and downtrend. Now, on an uptrend, you want to be looking for buys. So you want to be going with the trend. At least that's my style. I want to be going with the trend. And the places where you want to be looking for an entry are going to be those that are going to carry the highest probability of a long trade, which is going to be, in this case, on your higher lows. So if you're going to be buying, you're buying on an uptrend, and you're going to be doing that on the higher lows. So you're buying right here. That way you can get out at the very top. Now, Orion mentioned the moves and the retraces. On an uptrend, this is the move. The push is the move. The pullback is the retrace. That's how much the market, think about it as it's breathing, right? As it's pushing out, it's exhaling, but then it's gonna run out of breath. You have to inhale. So then you've got that retrace.
You might also hear that called an impulse move. It's called a few different things. I normally refer to it as impulse moves and then retracements, but impulse, move, push, anything that is making that next leg up before the retracement. And that's really the biggest thing you got to understand about market structure, guys. The market moves in impulse moves and retracements. And if you get the vibe for how that rhythm works, then you're going to be much more successful in trading.
Yep. You always want to, like I said, on an uptrend, you're going to buy, at least with my style, at a higher low. On a downtrend, you want to sell at the end of the retrace. So here it is. Here's the secret sauce. You always buy and sell at the retraces. You don't at the finish of them, at least. You've got your move, you've got the retrace at the finish of it, at the exhaustion, that's where you buy. You've got the move, you got the retrace at the finish of it, you buy. You've got the what was the move. Now this turns into the move. Right now we're in a downtrend. This turns into the move, this turns into the retrace. Move, retrace. Here is where you sell. Right here on the lower high. Right there. You got the move, you got the retrace, that's where you sell again. You see the pattern going on there? You don't want to buy over here. That makes no sense. You're running full send at a wall. That makes literally no sense. So you want to make sure, and this is why market structure is so important. I trade mainly off of market structure. And this is why it's so important, because it tells you where you are inside of price action, and it takes the guesswork out of it. Now, what Orion was talking about earlier and Josh was talking about earlier was you can have one time frame, have one market structure, and another one will have another one. I'm just going to go into this for like 2 minutes. I'll go way deeper in a different session, but
I was about to say, you're about to go down a rabbit hole.
No, you won't get me started there, I promise, because I know you guys have, your time is valuable, so it'll just take me a second. Let's say, I just want to, just for analysis purposes, I'm very passionate about market structure, okay? Leave me alone. Anyways, let's say for analysis, for just explanation purposes, this is H1, right? So you've got the H1 time frame. If you were to zoom in, what do you guys think you're going to be seeing here? You're going to be seeing market structure. And what that's going to look like, let's say this part right here, right? Right there. We'll do that same thing inside of this, and we're going to zoom in. Actually, let's keep it like that. This right here is going to look like this. Maybe not that ugly. Oh, snap. Let's do that again. It's going to look like on the lower time frame, higher highs and higher lows. This right here, guess what it's going to look like? A break of structure, because now it's changing. You've got your break of structure right there, and then all of a sudden it's looking like this. And this right here is this right here. And then all of a sudden this right here, guess what? Break of structure again. It's literally just zoomed in. I just took the guesswork out of trading for you guys. It's literally just zoomed in. You look at this right here, that is this right here on the lower time frame. So if you can master this, the market structure, you're going to know where you are in price action at all times. If you can master multi-time frame market structure, while everybody else sees one thing and they get tricked, you're not going to get tricked, because you're going to understand where you are in the higher time frames as well as the lower ones. And this gives you your entries, your exits. It tells you the bias for the long terms. I mean, this is everything. That's as deep as I'm going to go into it, because otherwise, like, I can talk about this for hours. But I want to see ones in chat if you guys are understanding this.
If you're done, Jordan, let me take the screen for just like 30 seconds. I just drew something real quick that will kind of help explain what you were trying to draw there.
That's all yours, babe.
Again, we don't want to get too into this, guys, but this is what Jordan was trying to explain right here. Basically, let's assume that these green arrows are like a daily time frame, and these yellow arrows are like an H1, like an hourly time frame. These are the impulse and retracement moves within the one impulse move on daily. So this green arrow is a daily move. These yellow arrows are hourly. You have impulse and retracement moves within one impulse move on a daily time frame. And so that's kind of the understanding you have to have when it comes to market structure. A higher time frame move has a lot of smaller, lower time frame moves within it. And once you kind of understand and practice this concept, you'll know that you can make these buys. If you're trading the hourly, your buy is here or here or here, and all of a sudden you're going to be buying on the retracement of all of these hourly moves, and that's going to increase your risk reward quite a bit.
Yep. Sorry, I didn't mean to take that away from you, Orion. I just wanted market structure is like, oh, I love it. So honestly, I wanted to jump in there real quick.
Honestly, I mean, everything you said is kind of what I was going to say, I guess, without showing it in simpler terms like that. Let me see the screen really quick.
Yeah, how the heck do I get rid of it? Oh, here we go.
I actually think I can.
Guys, if you got questions, hit us in the chat.
Yeah, I wanted to touch on what you were just saying about the impulsive move, like the lower time frame moves for the bigger move. So let's just look at GA really quick. No, actually, let's stick with GJ really quick. All right, so I'm gonna highlight this area here because, and also another thing when it comes to trading, accountability. Because since I'm a swing trader, I was waiting for the nice lower high pullback, into the top of this region here before going short. But like Josh just explained, this entire move, actually, hold on, let me leave that highlighted. This entire move, when you drop down to something like the 1 hour, it became so much more clear. So you had, this was the higher low, the most recent higher low. So in order for structure to be broken, you need to break past this higher low. So you had this high here, price came back, this was the higher low that needed to be broken. Price formed a higher low here. If you draw a quick trend line in there, you can see it broke out of the trend line, came back and formed that lower high. Now, all of this that's highlighted was that one candle on the daily. So understanding the overall market structure from higher time frame to lower time frame is always going to help you, I guess, like Jordan said, not gamble. You know what I mean? Because you understand what the market is doing. So when you're placing that trade, it's more of a calculated risk opposed to, I hope I win this trade. Does that make sense?
Yeah, I mean, the best traders in the world understand risk management and understand that you do not win 100% of your trades. It's mathematics, guys. You have to understand your risk management and understand that, okay, if this trade is a 4-to-1 risk reward, even if I lose this trade, the next one that I do is gonna pay out 4 times as much as my loss is on this trade. And you have to understand and dial in your risk management. And at that point, it just becomes a numbers game, guys. You want to improve your probability of a trade going in your favor. But obviously, none of us can sit here and make the market do anything, right? We're reacting to what the market gives us, and we're using our tools to increase our probability of a winning trade and making sure that our risk reward is favorable.
I agree. To answer Blake's question really quick, I just saw it. Swing trading is holding a trade for more than 1 day. Yes, typically a swing trade, you're in that for 2-3 days, sometimes 4. Like Josh has said, it kind of depends on how quickly the market wants to move that week. Oh, actually, you already answered that.
Yeah, we're trying to keep on top of it. We're trying to keep on top of the chat.
All right, yeah. So yeah, outside of that.
Do you guys have any other market structure questions? We're going to be doing more of these webinars, guys. We'll cover other topics, support and resistance, supply and demand, moving averages, whatever you guys we'll kind of probably just do like a popular demand type thing. But we'll be doing more of these calls. So I want to stay focused on market structure for the most part and then answer questions. Best style of trading for a newbie. That really depends. It depends on what kind of time you have, right? Because, I think that it's easier to be a swing trader as a beginner because you have more time to react to the market. When you're a scalper, you're usually trading like the 1, the 5, the 15-minute time frame, and you don't have a lot of time to react to what the market's giving you. You don't have time to take a step back and really review and analyze what things are going on. When you're scalping, you have to know your stuff because you need to be able to make decisions within seconds. When you're swing trading, all of your candles are H1, H4 daily. So you have a lot more time to sit back and actually spend time on your analysis. If you need 30 minutes to do a chart analysis on a pair, if you're doing it on the daily time frame, the price is not going to move on you. So I would say for brand new, if you're totally fresh to this, I would start on higher time frames and learn that way. Just make sure that you understand.
Would be good too.
Huh?
I think intraday would be good too. Depends on I think it heavily depends on your lifestyle, how much time you have to dedicate, and as well as your personality. Because like me, for example, I hate holding a trade for days. It's just not my thing. I like to be in, stay for a few hours, catch the move, get out, and I maximize my trades. I'm not going into the markets like all the time. I find the right entry, and then I scale in, and I make the most out of that entry. So it just depends on your personality as well. But intraday or swing, I think, would be best.
What are good indicators to use in order to show when retracement is done? It's time to execute a trade. That's kind of a loaded question. We're probably going to touch more on indicators in another webinar. I don't want to go too far down that rabbit hole since we
personally use too many indicators. I'll answer it like really shortly. I look at a couple of different things. Confluence is king. So I look at not only market structure, but I also look at my support and resistance. I do a lot of candlestick analysis. Candlesticks tell you a story, in my opinion. So knowing what the candlesticks are telling you is huge, and knowing whether there's buyer exhaustion, seller exhaustion. So just we have different resources that we use to make one analysis. We don't just look at the chart and be like, oh, it's going to go down. It doesn't quite work that way. You look at a couple different things and you try and have as many things pointing to that direction as possible, and that's how you make the most educated decision. It all comes down to that.
Next question I saw, can use the same type of technique for cryptos and indices. So what we're showing you guys right here is technical analysis, and that applies to anything that can be charted. So we're showing you Forex, and Forex is what my partners and I focus on the majority of the time. I also do a lot in crypto and stocks, but technical analysis is applicable to anything that has a chart, guys. So you can take these same skills and go to the stock market and make money there as well. The only, you just have to understand the fundamental differences. Obviously, the stock market is not open 24/7, and the Forex market is open 24 hours a day, 5 days a week. So you have to kind of understand those barriers. But the skills that you learn in technical analysis, and this is why trading is such an important skill to learn in general, you can take this to any market and be profitable with it. All right, it looks like that is most of the questions. With that said, Orion, you want to just take some requests on pairs and do a top-down analysis? Or what are you thinking?
Yeah, we can do that. Any pair in particular? Okay.
I see EU in here. Good old classic to start it off.
EU,
I'm gonna say
GJ, UJ, NOS.
GJ.
Guys, I'm going to go ahead and drop my personal Facebook on here too. I see some more questions coming in. That's great. I love getting questions, but hit my Facebook with them, guys, because I'm going to let Orion carry on with some chart analysis.
I'll drop mine in there too.
Yeah, Jordan will drop his too. Feel free to send me a friend request or follow me, whatever. I think my Facebook might be capped again, unfortunately. I'll drop my Instagram too, just in case.
Yeah,
the only way any of you are talking to me is if you add me on Facebook, because I'm still in Facebook jail. So do that first.
Feel free to hit us up there. If you have any questions, guys, we love to work with you.
Hold on, I'm scrolling through. Chat,
yeah, George.
MJ, GJ, UJ, EU.
NOS. I saw NOS.
Dude, I don't think I've ever been cold in my office before.
All right,
this is weird.
So I'll do EU, GJ, and NJ. We'll get
all right, cool. Let's do it.
Okay, so top down, keep in mind EU is not a pair that I trade because it is kind of all over the place usually, but just see something. Okay, so I see a lower high. It's being formed on the monthly.
And usually when Orion says top-down analysis, he likes to start on higher time frames just to get his bias right. And that's usually a good method for beginners as well. There's a lot less noise on higher time frames. So he usually starts on like a monthly and then works his way down and kind of keeps the bias consistently. If you can get the same confluence throughout multiple time frames, then it's usually a better probability trade.
Agreed.
Ryan, someone asked for you to zoom in.
Oh, sorry.
No worries.
Yeah, it's weird. It's like when you're on a big screen, it's like you just forget.
Yeah, and then when you're on a phone, it's so tiny.
Yeah. Is that good enough? Am I zoomed in good enough?
Yeah,
think it should be fine.
now.
Yeah, it's like I usually like to look left at the structure to see where price can come down to. This looks like a good area here. So what I typically do is I set my weekly levels. I personally don't typically mark up the monthly, only because as you drop down to the lower time frames, if you keep the lines on the chart that low, it could get a little confusing for some people. So for me, I just I either write it down or keep it in my head. 531 weekly support. And I would have placed my weekly line up here somewhere, but since price looks like it's moving down, I set it based on this wick over here. Because when I look left, I can see it was resistance here. Nothing. It was support over here, resistance over here in the past. But I feel like price is going to close bearish this week, so that's why I set it to that wick. But then I would drop down to the lower time frame after realizing that price is kind of uptrending on the weekly. I still understand that price needs to create a higher low on this time frame, even if it's going to continue higher. So going back to the monthly time frame really quick, previous month was bullish. This month right now looks bearish, but we still have 21 days on this candle. So like Josh said earlier, anything can happen within this 21 days. So dropping down to the weekly time frame, keeping market structure in mind, the most recent lower high for me that would have been valid would have been like somewhere here, because it looked like this was a weird news week. Oh, actually, this was coronavirus, when coronavirus thing happened around beginning of March and the economy shut down. So market kind of went crazy around that time. So for me, this would have been the most valid lower high to consider. Price broke above that lower high.
Yeah, a lot of people are asking, what are these lines? Fibonacci. We're gonna have to go through Fibonacci on another
Yeah,
call, guys.
sorry.
I know we
I was
do have a
thinking of
lot
doing
of
that on
beginners.
Sunday.
We have a lot of beginners in here, and I get it.
forgot.
I would love to sit here for 10 hours and teach you everything, but
Okay, so to simplify it without the lines, price broke above this lower high here, creating a new high here. Or even if you want to consider this the new high for the newer people, you can consider this a new high, but you'll soon realize that this was all news. So the candles kind of went crazy. But either way, price pushed up, creating a new high. So like we just said, you need to see a higher low before price continues to move higher. So what we're seeing right now at the top is that ascendance downwards pretty much. So dropping down to the daily time frame now, I would say, okay, structure was creating highs in here, double topped here, came down, broke structure. Okay. So this was the most recent higher low, right? We had higher high, higher low, higher high, higher low, higher high. Price broke past this higher low here, creating a new low. So now we're going to expect price to continue lower. Drop down to the 4-hour time frame. And same thing, I'm seeing lower low, lower high. Well, actually, this is the first lower low. But either way, lower high, lower low. So now I'm expecting to see price pull back to create that lower high for us to continue lower. So lower high somewhere in there, and then price continue lower. So for me, my bias on EU is bearish for this week. Tonight for London, most likely we're going bullish. So intraday buys maybe for London session, and then bearish going into New York session. Going to hop over to GJ. GJ right now, we just broke structure here. Just starting from the daily time frame. This was the most recent higher low. Dropping down to the 4 hour. And I'm not placing.
Go ahead and label the break of structure.
Go ahead, say that again.
Can you go ahead and label the break of structure just so that people can see, since we just taught them that? Maybe like, yeah, draw like a line to it or something. Yeah.
So this was the break of structure here because this was the most recent higher low after creating a new high here. And why that was a new high is because we broke above that previous high there. So created a new high, higher low, higher high, but then we broke structure. So now dropping down to the 4 hour, I'm expecting to see a lower high be formed.
As a confirmation.
Somewhere in here.
Mm-hmm.
That's that confirmation I was talking about earlier.
Exactly. So exactly, pretty much like Jordan just said, you're building your confluences from the higher time frame down to lower time frame for everything to make sense. So if I'm seeing that the higher time frames are bearish, me looking for buys is a little weird, because unless you're scalping the lower time frame, which we'll get into later, but overall, when you're looking at structure, you typically want to follow the trend. Yep. So, some people, or like I just mentioned with EU, you will see intraday buy setups where you can buy up to here and then sell back down. But, that's a whole nother conversation.
Just understand that trading is a game of psychology. And if all of the other retail traders out there know to trade with the trend, then if you also trade with the trend, then you're riding the wave rather than fighting against it. So you can take what we call counter trend trades. So you could buy this right now with the, if your bias is that this is going to pull back, you could technically buy it, but you're going to be trading against the trend. And that's always a higher risk trade. So especially when you're beginning, you always want to trade with the trend. If you're in a downtrend, you want to make sure that you're buying at the peak of those retracements. And if you're in an uptrend, you want to, buy at the peak of those pullbacks of retracements.
Ooh, GJ longs, they look kind of good though, baby. Oh man, hold on.
Someone wants you to pull up EJ because it looks identical.
Yeah.
I give you guys.
They can sometimes look identical.
I tell them not to counter trend trade, and you're going to show them a counter trend trade.
Short means you're selling, long means you're buying.
Cancel that.
What is short and long? Short means that you are, what is the quickest way for me to explain
You're selling.
This?
Long means
you're
buying.
selling, but when you say selling, people think that you're exiting a trade.
When you hit the sell button.
Yeah. So in Forex, you can buy or sell, and each one means entering a position. A lot of people think sell means that you're exiting a position. So in Forex, because you're exchanging one currency for another, there's always a buyer and a seller of each transaction. So when you're selling a currency, that means that you're expecting the chart to go down. When you're buying a currency, that means that you're expecting the chart to go up. And that is the simplest way I can explain it without confusing literally all the beginners in here. But just get in the habit of saying you're closing or exiting a trade rather than selling, because selling is very misleading in Forex.
Ooh, EJ longs too, baby.
EJ longs too, baby. That actually looks pretty good. That actually looks pretty good.
Oh, man. Oh yeah, EJ Long. EJ Long.
Yo, turn on your webcam. I want to see your face while you're doing it.
Oh man.
Look how happy he is.
Bro. Hold on.
Oh my god.
Any other
Trading is addicting.
Yeah. Any other questions, guys? Keep them coming while Orion's having his time over there.
Oh yeah.
Oh my god.
Or if you have any other requests, guys, I'm happy to look at any stocks or crypto as well. George,
I gotta
George
post that
Dixon is not
signal
allowed to
while I'm
suggest any
tripping.
cryptos.
Uh,
But anyone else, if you have ABCD strategy worth using, another rabbit hole we probably shouldn't get down into right now. There's a lot of different strategies, guys. There's a lot of different ways. There is no one perfect way to trade. There's a lot of different ways. And you just need to figure out what works best for you. What's a good broker, Chad, for TradingView? I don't use domestic brokers, so I can't trade through TradingView.
I
Do
literally
either
just
one of you
bought
guys?
that, by the way.
What'd you say?
I bought Euro Yen, by the way. I wasn't
Oh,
kidding.
you literally just bought it?
Yeah.
I don't trade through TradingView, guys. I use an offshore broker called FX Choice. But when you're choosing a broker, the most important thing, in my opinion, is to go with something that's regulated. Doesn't necessarily have to be regulated in the United States. It just needs to be regulated by somebody. You don't want your broker to feel like they're not liable to some kind of regulatory body. So there's a lot of risks involved with that. So just be careful. That's my only suggestion with that. I don't want to tell you guys what broker to use. I would just say try to make it a regulated one. George, they're looking for a TP, or Orion.
Oh,
George is
Ryan.
looking for a TP.
Oh,
What you got, fam? Let me look here.
my
125.4.
my final target for this move is going to be 126, but I mean, you could take 125. I mean, that's a quick 25 pips easily.
Yeah.
I mean, it depends on how long you want to hold it, but if you're looking for a quick 25 pips, 125, even 125, 250 looks really good as well. We're in profit already on that move.
Yeah, I was looking at like 125, 400-ish area.
Yeah,
Not gonna try
anywhere
and get greedy with it.
that region. Yeah.
How do you know it's regulated? So just go to the about me the about section, with whatever broker's website you're on. And if they are regulated, they will be very, very clear about it because they want you to know they're regulated. If you can't find a regulation listed anywhere, that means they're not regulated. They're not going to come out and say we're not regulated usually. But if you're on their site and you go to about or company information or whatever, you'll see it front and center because they're proud about it. And if you don't see anything there, then I would look for other brokers personally.
Like unregulated in the US won't let you use over 50 leverage. But typically, like when Josh is saying regulated, he doesn't necessarily mean in the US. He means in whatever country that broker is based out of. So it's regulated somewhere else, not necessarily here.
Yeah, it doesn't have to be a US regulated broker. US regulation does cap at 50. FX Choice is regulated by Bulgaria, I believe, or Bolivia. I think it's Bulgaria.
Something with a B.
And I think I'm running 1 to 400. Jordan, is that right? Is it 250 or 400? I don't know. It's like I think it's 400.
I think it's 1 to 300.
But yeah, so you can get a regulated broker that gives you more leverage offshore. And
Hugo's way gives you 1 to 500.
There's nothing illegal about it either. I get that question all the time for some reason. You can use an offshore broker. It's perfectly legal.
Yep.
Is there a U.S. listing of the regulated brokers? I'm sure there is. I don't have them handy. The ones that are on TradingView are all U.S. regulated brokers, I believe. Oanda is one of the most popular ones. That's OANDA. OANDA, I think. Yeah.
Oanda.
Yeah.
Good stop loss for EJ. He's got it on his chart there.
I was actually just
adjusting
that a little bit.
I was gonna say maybe drop that a little bit.
We trade with MetaTrader 4. So we actually make the trades on MetaTrader 4. We do our analysis on TradingView and make the actual trades themselves on MetaTrader 4.
124.350 is my stop.
124.350, guys. We're giving you nuggets right on this webinar.
Just use risk management, guys. That's always very important.
Please use risk management. As always, guys. Please. Yo, God just asked us, is this an alert? God, how you doing, fam?
Hey, can you check out for us 2020? What's going on here? Some crazy stuff. We gotta talk.
That is wild. God is in this meeting.
Is there anything else you guys want to see, guys? Let's keep it moving. Keep asking questions. If you want to see any Any stuff or any stocks, crypto, forex? Hit us, hit us, hit us. Put us to work.
Hold on, I'm here.
Gold. Oh, they want to see gold, Orion. I know you want to show off gold.
Yeah, I got gold.
I know you want to show off gold.
That's his thing.
1 second.
He's too busy trading over there.
Yeah.
No, I was putting in the signal for the signal room.
Oh, okay.
Yeah, I had to
Free
format.
signal for you guys.
That would have been
Yeah.
crazy to be like,
Plugging
all
that
right,
into
yeah,
the
free
signal
signal
room.
for you guys.
MT4 versus MT5. I use MT4 personally. Orion's actually kind of got me on a kick for MT5 recently. I think MT5 just has a lot of noise for beginners. I think MT4 has literally everything that you needed to have, and it's a little bit easier to understand as a beginner.
Most
But you
brokers
can
are also
use-
on MT4 too.
Yeah,
The
well,
majority.
that was the case like 3 years ago. I feel like it's a little bit better now.
You think so? I haven't tried it in a
When
while,
MT
obviously.
When MT5 dropped like 5 years ago, not a lot of the brokers were on it, so we just stuck with MT4.
There wasn't much
But
support.
it's a little bit better now. But either one, guys. Yeah, MT4 is what I would recommend if you're going to make me pick one. That's what I use.
I
Right,
want to
so-
bring up gold, and I'm so salty.
man, this
I
is
missed
looking-
my entry on it this morning.
This is looking good.
So with gold right now, actually, let me just go back to this chart.
Yeah.
Start with the monthly. So as we can see, monthly time frame created new high, but looking fairly bearish right now. Weekly time frame showing me the same thing. Bearish engulfing last week. This week still fairly bearish. But then when I drop down to the daily time frame, it's like, okay, price is finding support. What the hell? There we go. Price is finding support in these regions, right? So that leads me to believe that price may be ready to turn around. But looking at the daily candle currently, it's kind of bearish. So I'll drop down to the 4 hour, see what that's looking like. See what structure is doing. We had a high here. We had this higher low here, but that higher low broke. Lower high, lower low, lower high, lower low, lower high. But then this is where it gets kind of tricky. Because technically, don't think too much about this. Price could still retrace up to 1960 and still be considered in a downtrend on the 4 hour. We'll get into that at a later time. But what I would do at this point is drop down to the 1 hour, see what that's doing. And to me, it looks like price wants to continue higher currently. Maybe get a spike down to 1920. And the reason why I say that is because price broke 1 hour structure. So the next thing I usually do, and it looks like we could be forming what would be called an inverted head and shoulder, which is another market structure pattern right in here. But I'd wait to see a little bit more price action. 30-minute. Like if this 30-minute engulfs, then I'd say gold is going to continue up through the night. But I'd wait to see that engulfing. Or price test the bottom of this region again as support and engulf at the bottom of the region, then go long.
Yeah, and that's an intraday trade, guys, because on higher time frames, I think Orion and I are both expecting a deeper pullback.
Yes, that would be an intraday trade, correct. That's a short-term buy, not a long-term buy, because I am expecting price to come down lower based on what we just said with the monthly and the weekly.
Yeah, and just kind of going back to structure real quick. I don't know if you can throw it up on weekly. I think it's the cleanest look for it. Maybe daily, but you can see that price is making um, lower highs, but without making lower lows. And that pattern usually means that the
Oh,
bullish pressure is losing steam, right? So this to me looks incredibly bearish long term or on a higher time frame because we're not making lower lows yet, but we are making. You can see that the each one of the highs is getting a little bit lower, and that pressure kind of pops when it gets compressed at the very end of that pattern, and it
right.
usually has a pretty what we call a breakout. And in this case, I would probably expect it to break out to the downside.
Oh, look
Um,
at this actually as well. I just was saying 1960 was possible on a lower time frame. That's 1955. You could see price pop up into here to form another lower high for more pressure and then the break.
yep. And that's kind of what I'm looking for on gold. Honestly, that exact pattern right there.
Yeah, I'm in agreement with you.
Cool. Take out those equal lows, test up and drop. Yeah. So usually when you get a breakout like this, you want to wait for the confirmation or the pullback into that broken support area. So what I would look for when that breaks out is for it to drop with a big bearish candle, a pullback to retest that broken structure as resistance, and then it's going to drop from there. That would be my entry for a short.
Something like this.
Yep, there he goes. Maybe zoom in a little bit on that, Orion, for people on small screens.
Someone wanted you guys to explain candles just a little bit more.
Explain candles a little bit more.
Generation X.
That's like an entire different video.
I'll give you like a quick 30-second explanation. But yeah, we have training guys that goes over this in much more detail. I think I have like a 30 or 40 minute long video just on candlestick analysis or on candlestick anatomy. But each one of the bodies, so the colored part of that candle represents the open and the
Open, high, low,
lowest
close.
or the highest, or I'm sorry, the open and the close is the body. And then the wick represents the highest and the lowest point. So the wick is the line that sticks out of the top or the bottom of the candle. And the body represents where it opened and where it closed, depending on if it's bullish or bearish, if it's a green or red with standard color scheme. But that's kind of the quick little 30-second explanation. The body is open to close. The wick shows you the highest point that price traveled during that period of time and the lowest point that price traveled during that period of time.
Yeah, if you guys like I go over this stuff in my ebook. So if you just send me your email address, I'll send you over the ebook.
Oh man, if you have everyone type that in this chat though, I don't know if you're ever going to get it back. Maybe have a message on Facebook or something.
Yeah, I put my Instagram
Okay.
in there for you guys to DM me on Instagram.
Yeah, hit him up, guys. He's got a really good ebook for trading.
Actually, let me see.
Or can you drop the file in here? I don't know.
I think
Maybe
It might be too big.
Yeah, it might be too big. Maybe just hit him up on Instagram, guys. He'll send you the ebook for free. You want to open it and just show him what it is?
yeah.
If you don't have Instagram, guys, hit me up on Facebook. I'll get it to you. I'll drop my Facebook again.
Oops. So just to kind of scroll through it really quick. So it goes through the like very, very basic. What's a pip? What's a pair? What's leverage? Stuff like that. What is a stop loss? What's a take profit? Candlestick pattern. Well, market structure patterns that I was just kind of covering, like inverted head and shoulder. What's a pullback?
Man, I forgot how good this ebook was.
That's a good plan.
Evening stars, bearish candles, bullish candles. What engulfings are, risk management, psychology. So, I
Guys,
try
please
to go somewhat in depth. I plan on extending it, but for now, that's what I have. So if you want a copy, just shoot me a DM on Instagram.
Yeah, and I might be able to get that added to. Well, actually, do we have on our website?
I can probably get that added to the website.
Yeah, is it not already on there?
It might be.
Let me check real quick, guys. I might be able to get you a direct link to download it. That might be easier.
Yeah,
It's not
might
ready yet,
be-
but I'll make sure it gets ready.
Okay, maybe by next week we'll have that ready for you guys.
I'll have
The
that ready
link.
in a few days. Just make sure that you guys are either hitting up him on Instagram, me on Facebook, or Josh on Facebook, and either one of us will go ahead and get that out to you, and then we'll have it on the
Yeah.
website in a few days.
Yeah, hit us up, Instagram, Facebook. Just send us your email, guys, and we'll send it out to you. There's like a bunch of Facebook and Instagram links floating around in the chat right now. So just pick one and send us your information. We'll get it out to you.
for sure.
Cool. Cool. Andy, we're not going to talk Epic in here, guy. We're really focused on trading. I don't want to get into all that, but hit up whoever your sponsor is and they'll get you sorted.